Hey everyone, in this video, I'm going to look at two more AI stocks and compare them and answer which one I think makes the better AI stock to buy today. The two AI stocks I'm going to consider are Palantir Technologies and SoundHound AI. Of course, SoundHound AI gaining popularity because NVIDIA made investments in this company, and so investors saw that as an interesting investment to consider. If NVIDIA is interested, of course, there might be something there. So I'll compare these two and come up with the conclusion on which one I think makes the better buy today. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the first metric I'm going to compare these two on is revenue growth. And one thing you note here is how volatile SoundHound AI's revenue growth has been compared to Palantir Technologies. Now, SoundHound has in many quarters outgrown Palantir Technologies, but that growth has been volatile, whereas Palantir has been growing at a slower rate, but that's more consistently slower. So SoundHound AI is likely to grow revenue at a faster clip than Palantir over the next several years, but Palantir is likely to generate more lucrative growth, more profitable growth, and I'll share that with you in the next slide. The operating profit margin determines how profitable a company is in generating profits from its operations, and Palantir Technology has done a good job in turning this thing around and becoming profitable at 5.39%. That's up from negative levels a couple of years ago. SoundHound AI has also made excellent progress on profitability. Of course, if you remember, early in 2023, SoundHound AI management restructured the business, saved significantly on expenses, and now in the most recent quarter, even though revenue increased by 80%, total operating expenses actually decreased, and especially on sales and marketing. So the company is making progress, but it's still very negative here, negative 139% in operating profit margin. But I usually say I don't mind if a company has a negative operating profit margin as long as it's making good progress towards profitability. And you can clearly see that here with SoundHound AI making sharp improvement towards profitability. The next metric I wanted to look at is cash flow from operations, and I want you to understand why this metric is important. Cash flow from operations is one of the most vital metrics I consider when making an investment decision. If any financial shenanigans are happening, looking at this metric can help uncover the fraud. Moreover, looking at profitability without considering cash flow from operations can lead to a misleading picture of a company's performance. For instance, look at the example I have created here. The company reported a net loss of $250. However, when you look at the cash flow from operations, it was a gain of $35. How can that be? Well, two expenses a company must report on the income statement are depreciation and stock-based compensation. Importantly, these are non-cash expenses. Money is not leaving the company for these expenses. In the case of depreciation, when a company buys a machine for $750, it pays all of that price up front. However, generally accepted accounting principles require that the company take the expense over a period the machine is expected to operate. So if the machine is expected to last for 10 years, the annual expense will be $75 per year for 10 years, even though the company paid the $750 cash at the time of the purchase. Also, when a company offers its employees a stock option, it's not parting with cash. However, it must record the cash value of the option as an expense on the income statement. So moving on to the working capital items, inventory management is the easiest way a company can increase cash flow. The simplest case is when a business has 100 inventory units, sells 30 units, and doesn't replace those units. The decision would reduce total inventory and increase cash flow. As you might already be thinking, this isn't sustainable. Eventually, the company will deplete all its inventory and go out of business. Accounts payable is the money that a company owes another company and has not paid yet. And accounts receivable is the opposite. A company can increase its cash flow by collecting payments faster and paying suppliers slower. If done with skill, companies at scale can take advantage of these timing differences to boost cash flow by a couple of percent annually. Costco is one example that employs this strategy masterfully. Overall, if you observe cash flow increasing unsustainably, you should expect a reversal of that trend. The other big risk to consider is if you see a company reporting substantial profits but negative or weak cash flow due to rising accounts receivable. Now that you've got a better understanding of cash flow from operations, you can see yet another metric where Palantir ahead of SoundHound, and a similar story here from SoundHound AI, making great progress but still very, very negative here at negative 148.8%, while Palantir Technologies at a very solid 32.01%. Now, one of the reasons a company can generate profit while still being relatively light on profitability is shareholder dilution. So I want you to take a look at why average shareholders outstanding is important. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. Okay, so looking at that, you can see they've both been diluting shareholders. Palantir now has 2.34 billion shares outstanding, up from 1 billion, so almost 2.5 times shareholder dilution, whereas SoundHound AI has gone from roughly 60 million shares outstanding up to 250 million. So they've both diluted shareholders significantly, SoundHound AI more so than Palantir Technologies. And finally, I wanted to compare these two on valuation. And on most of the metrics that we looked at in this video, Palantir was the superior performer, except in revenue growth, where SoundHound AI was better. SoundHound AI, meanwhile, had the advantage of better growth towards profitability, better growth towards cash flow from operations. The rate of improvement was much better at SoundHound AI, but the level was much better at Palantir for most metrics. But the valuation is very similar when measuring by the forward price to sales. Palantir is trading at a forward price to sales of 15.78, while SoundHound AI is at a forward price to sales of 15.04. So given everything we looked at, Palantir is the superior company here and only trading at a fractionally higher valuation. So if I was to pick one of these two AI stocks to buy today, Palantir Technologies would be my choice. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.